So you've heard the Wall Street line, buy the rumor, sell the news, and mortgage rates followed this market behavior to the letter. So here's your September Space Coast Real Estate update. Mortgage rates started out the month at 6.53%, dropped to 6.13%, and then after the Fed rate cut, mortgage rates rose to 6.4%.
So why did mortgage rates go up and the Fed rate went down?
So mortgage rates, they follow the bond market, typically the 10-year Treasury and mortgage-backed securities. They don't follow the Fed fund rate directly. So bond traders, they price what they think inflation, growth, and Fed policy will be months ahead. So into the cut, the market expected the Fed to ease up and inflation to cool, so interest rates on longer-term bonds, those dropped first. So then lenders followed suit, and then they lowered the rates.
So think that would be buying the rumor.
So after Fed rate cuts, new reports and guidance made investors rethink that outlook. They wanted bigger profit to hold those longer-term bonds, and lenders just added that extra cushion to the rates because the market was jumpy. So that pushed long-term rates up. So mortgage rates rose even though the Fed's short-term rates went down.
So that would be selling the news.
Right. So in other news, we're watching inventory. And inventory, it's not following the normal market cycle. Inventory peaked in March, and it's actually been declining ever since. So normally in spring, listings swell, peak in October, and then whatever doesn't sell just kind of lingers through the holidays.
So inventory could be going down because sellers are taking their homes off the market.
So this year we've seen a lot of unsold homes. Instead of making more price cuts, sellers just not getting their price, they're just taking off the market. So sellers are waiting for the conditions to improve instead of just chasing the market down. And there's two reasons why they're doing that. One is the lock-in effect, and there's just low distress. I mean, most mortgaged owners still carry those pandemic rates of what, 2-3%?
Mm-hmm.
So if they're not selling for what they have their price in their head, then it just doesn't pencil for them. And then reason number two, I mean, so many people own their home free and clear. 40% of U.S. homeowners own free and clear, so they're not forced to sell.
So the translation really means less pressure to sell and more patience in the market.
Right. So sellers, if you want top dollar in today's market, you need three of these: best condition, broadest exposure, and most competitive price. Miss one of those, time on the market goes up. Buyers, unfortunately, with sellers withdrawing homes from the market, it reduces your choice just as the rates are starting to improve. So rate dips, they're going to be choppy. Have a strategy in mind and move on the home that makes the most sense for you.
So remember, time your life and don't try to time the market.
Thanks for watching. See you next month for State of the Marketplace.